Hi everyone, welcome to another honeystocks.com analysis leading into the election. Now, before I switch over to my screen share and walk you through some important charts, I think it's very important that I open up my work to the world, especially this week. I receive a lot of emails, a lot of social media messages, etc., asking me to do more analysis videos. The truth of the matter is I'm just way too busy now, unfortunately. I know that I used to do these videos every weekend, but my client base is getting to a level now where I have had to start capping numbers, etc., so that I can provide as much support as possible. So hopefully that explains for those of you that keep asking me to do more videos. But what I'm wanting to do this week is share with you the analysis that I sent out to our clients a couple of days ago. The thesis that I had seems to be playing out at the moment, and of course we have a massive week next week. So rather than ramble on a little bit and a lot of fluff, as I like to call it, I think I'll just share that with you because I think it is very important. I mean, it's all great when the market's going up and we can provide bullish charts, but I think a lot of you that are watching will be struggling maybe with the technical side of things and to understand the key levels in the market, and perhaps getting defensive is something that you maybe struggle with a little bit. Just for complete clarity, over the last couple of weeks, for our clients and members, I've been urging about getting a defensive plan in place leading into this weekend, leading into the week, and hopefully you get some insight from the charts that I'm about to share with you. But if you're somebody that struggles a little bit, you can maybe stick around for a minute at the end. But let's see what the market's telling us, and like I said, hopefully you get some insight from this. Hi everyone. So it's been a very volatile and disappointing week so far. I think we can all see that. I'm getting a lot of, I guess, private messages asking me what my thoughts are, what's likely to happen going into the election, what can we expect after. Now, I think the first thing to say, and this is hopefully my one size fits all um, response, is I have absolutely no clue what is going to happen over the next few days. I have no clue what is going to happen after the election. That'll be down to the market. I think a few things that I have an eye on, and certainly technical analysis is all I'm going to be focusing on. And the key price levels that I believe are important in the market. That's all we can do at this moment in time. There's going to be stocks that continue to work, and there are going to be some stocks that continue to not work. But I think the message has been over the last couple of weeks is to have a plan. So what the plan could potentially look like if you're not happy with increased volatility, maybe starting to reduce exposure, etc., in case it gets a whole lot worse. The market could equally rebound tomorrow, and we could blast off to new highs on the next president of the United States. I have absolutely no clue. And when we look at the SPY, it's very easy to draw some lines on a chart. And I also understand that, if we come down and test the bottom of this level in the SPY, I know it's not as easy as me just, calling that play and saying this is, what I think is going to happen, because I know that the reality is that it corresponds and has an adverse impact on your individual portfolios, because, a 4 or 5% drop in the market can quite easily result in a 10-15% drop in your individual stocks. So, this is just a thesis at the moment. When we're looking at SPY, I think what we're looking at the moment is an uptrend, consolidation, and I have my eye on these two levels here. If we break below, I think all bets are off with the market. I'd be very concerned at that point. So are we looking at a double top, or are we going to get a double bottom? Again, I don't know the answer to that at the moment, but we know that with consolidation ranges, which is how I'm currently treating this, is we're coming down to test the bottom of this range, and that would correlate with 320. It may not get as far as that. We could rebound tomorrow, absolutely, but I would hope that most of you have some sort of plan. The thesis that we had regarding the 50 period simple moving average, that has ultimately proved to not be the case. We're not looking at a cup and handle at the moment, so I think 320 would be a logical level of interest. And I think from my perspective, what I would like to see happen here is just maybe just a bit of stability over the next few days. You know, however the market plays out, the market, you know, will play out, and you know, we get the election results next Wednesday, I think it is, and we get a bounce from here and we just start rallying, and that would be the signal for me to buy back into the market. But at the moment, I have got absolutely no interest in buying up new positions in the market. I don't see where the risk to reward is. I don't see the point in, you know, placing the bet or gambling on an outcome that we have no edge over. That there's absolutely no edge, in my opinion, at the moment. And I know that there's many of you out there that are continuing to hold and not doing anything. Again, I can't speak to you guys. I'm obviously very technical in the approach, and I know that a lot of you like to dollar cost average, etc., which again is completely valid. But you know, from a technical perspective, you know, we're looking at a consolidation range, in my opinion, and with consolidation ranges, we chop about and we test the bottom of the range and go back and forth until there's a definitive move in either direction. So I think if we break below 320, that then brings in the 200 period simple moving average, and again below that, you know, we can see what happened. The market crashed. That was a bit of a problem. So again, not to scaremonger. I don't know what's going to happen from here, but I think that something that, you know, just to impart early on in this analysis, which I'll get through in the next 5 minutes, is there's not going to be any bullish plays or any individual charts to buy this week, and that's going to be the same for the weekend as well. So this halftime analysis will cover the Wednesday and also my views on Saturday as well. I don't see my views changing anytime soon. If they do, then certainly I'll put an analysis out on Saturday, but this analysis is going to cover Wednesday and Saturday because of what we're coming up against next week, which I have to say, looking back over history, the actual election itself, when we have the results, it doesn't actually have any big moves after. It tends to be in the lead up to the election, as I touched on a couple of weeks ago with the 3%, 4% over the last two elections, that the market has declined, which is kind of what we're seeing at the moment. But as for the actual election, yeah, we'll have a couple of days of volatility, but you know, I'll be keeping an eye on these key levels in the market. Now, the same for the Dow. The Dow is currently, at the moment, it's flirting with the levels that we've seen a month ago. Again, I think it would be a problem if we break below. Now, this is the Fibonacci retracement tool that I've added here, and we had a perfect bounce off the 23.6 level a month ago, and again we're testing this level again. Now, obviously there's a correlation between the Dow and the S&P 500, so if the Dow drops below this level, again, what would that mean for the S&P 500? I don't think that would be, you know, particularly good news. So there may be a scenario here if the Dow does break down, you know, and start to come down and test the 38.2 level. Again, I think that's a problem for the overall market. But equally as well, and this is why I was saying that we could equally bounce tomorrow or the day after. And I have a couple of charts that might support that thesis. But again, I don't think it's a time for trying to be a hero. If you're in the market for the next 30 years, you know, I don't see any issues with missing a couple of days here. But, you know, I don't tell anybody how to manage their money. This is simply the technical view. Again, very similar looking chart with technology. We had a 14% correction, as we all know, at the start of September. If we come down to retest this level again, we would be looking at another 12.5% decline. And again, I'm treating it as a consolidation range at the moment. We're bouncing back and forth, but again, we'll see what happens here. Some of you will have noticed that I posted into the chat and to social media today about the failed breakout in the mid-cap index. Again, I think that's a problem. Again, I've built in a trend line here. Whether it has any merit, I've no idea at the moment. We do have 3 touches, so it could potentially have some merit. But again, I'm kind of treating it at the moment that some of these charts are going to come down and test the bottom of these levels and these ranges. However, that said, the all country world index, again, we're in a sideways range. I don't know how anybody feels about these charts that I have with the line charts. I think for some charts that they're actually a bit cleaner, a bit easier to interpret. So I'm kind of experimenting with them at the moment. I think you all get the idea. Again, we're in a range at the moment. What happens when we come down in the next couple of days potentially and touch these levels? And equally, what happens if we break below? We all know, I'm sure, about the issues that we're having in Europe at the moment with Germany, France, here in the UK as well. It's now really starting to take hold again, the COVID situation. There's clearly an economic impact. How is that going to translate to technical analysis? I don't know at the moment. I think when we had the crash, there were certainly areas that were seen as safe havens, the COVID plays, etc. Maybe those start to take off again. But again, I don't know at this moment in time. I'm just paying attention to the major indices, and when the major indices start to look appealing, I'll then start to look at the individual sectors and then drill it down to the individual stocks. For those of you that haven't been through the program or the technical analysis course, it starts with question number 1: do you want to buy the market? If you want to buy the market, you then drill it down and you find the areas of the market that you want to invest in, and then you drill it down using relative strength to find the individual names. So at the moment, question 1 for me: do I want to buy the market? The answer for me is a hell no. I don't have any confidence in what I'm seeing in the charts. Again, you'll all have your own opinions, but this is my view and how I'm currently viewing things. Michael, I know that you're all over volatility. Yes, volatility has clearly had a massive move as well higher. Inverse correlation with volatility in the market. So yeah, we're seeing volatility spike and we're seeing the market drop. Again, nothing has really changed there. Now, again, I was paying attention to this earlier on today to see what happened with TLT, if it would break out of a trend line that I've got an eye on. So again, there will be areas that there's hedge funds out there with mandates to be invested at all times. They have to move their money somewhere. So I'll be paying attention to a few areas of the market to see if there's any money flowing. If price starts to behave in a bullish manner, then I'll try and keep on top of it. I posted the chart yesterday into the chat groups with natural gas, which I think I've got prepared here. But again, there's very few areas that I've got any kind of massive confidence in at the moment. Trade updates, disclosures. I am out of Zoom today. I do not like the candle that we've seen here. Now that, as I said, it's still respecting the 20 period simple moving average. But again, I'm just looking to kind of reduce a little bit at the moment, and that's one of them. Yes, it could have been a lot better, but it's just the cards that I guess we've been dealt at the moment. Still holding Peloton. Peloton actually had a positive day, which is just unbelievable. So that's one of the reasons why maybe the COVID plays from a few months ago, those might continue to work. But again, we'll keep an eye on it, and we'll see what happens. CLDX, again, I'm still holding this one as well. It's done all right. It had a bit of a rebound today. I was thinking I was going to get stopped out, but it's holding on in there. I am happy to hold this one over the election. I like the company, and we'll see what happens there. But Nuance Communications, I know there's only a couple of you that were still holding. It's done. It's now closed below the ATR trailing stop. It's had a, I think, 7-8% move, but that one's now done. But yeah, so for those of you that missed the chart and the chat for natural gas, this is one of the areas. It looks like it's a bit of a bullish looking breakout to me. But again, do I have a whole heap of confidence? Yeah, well, it's difficult because it's obviously breaking out, so it is bullish. But I've just kind of got my skeptical hippo hat on, and I'm not entirely convinced at the moment. So we'll see what happens there, and we're just going to finish it up with the German DAX. Again, Fibonacci retracement. We've bounced off the 38.2 level. Today we've now reached over sold conditions, so you'd expect a little bit of a bounce here from the DAX, whether it happens tomorrow or we take another leg lower before it happens. But again, don't underestimate how the European markets can also affect the global markets, etc. You just need to look at the DAX chart and look at the correlation with the S&P 500, and when you see the DAX is breaking down, logically you would expect the same from the S&P, etc. So that's the analysis, as I said, that is going to cover today and Saturday. If anybody has any questions, thoughts or comments, please do reach out to me. If something doesn't make sense, again, please do reach out to me or comment below. I'll try and get back as soon as possible. And depending on how the market reacts over the next couple of days, I'll be logging in, etc., and just keeping an eye on things, because frankly we're pretty much back on lockdown here. There's nothing really to do. So stay safe out there. Have a plan in place, and we'll see how this whole thing plays out. But I don't see me taking any brand new positions until after the election. So, and like I said, that may be the wrong decision. I've been wrong 1,000 times before, but I just don't like what I'm seeing in the charts, and hopefully this makes sense to everybody. So thanks for watching, and I'll pick up with you all very, very soon. Thanks. If you've stuck around to the end here, there are a couple of things that we provide with honeystocks.com and my work. I'll just quickly run through this for you. I'm sure you've got your day to get on with, but my work gets a lot of attention due to a few things that I've kind of put out there over the last few years, namely the market crash, etc. Again, I don't want you to take my word for that. At the end of this video, I'm going to link the analysis that was provided to our clients and members before the recent market crash back in February. But what we provide with our membership, we provide a weekend analysis, very similar to the analysis that you've just watched. We provide a halftime analysis, which is provided on a Wednesday. We also provide trade ideas. Again, you can go and have a look at our website, because I'm very unique in this sense, where I publish all of our trade ideas that I've ever sent out to our clients and members, and I've done this for 3 years now. Again, I wish it was the industry default, but again, I don't think anybody else opens up their work to as much scrutiny as I put out there. We have access to our trading community. Again, please go and click this link and you can see exactly what our members think. We have on our platform a very high percentage of profitable traders. Again, don't take my word for that. Go and have a look and see what our members are actually saying and what they think here. I provide personal charting support on a daily basis, and included completely free, we provide full access to our technical analysis program, and I'm told that it's very, very, very good. Again, you can read a little bit more about my journey with the CMT Association. Technical analysis is something that I'm widely known for, and unlike many other gurus out there, I'm actually taking steps to take my professional qualifications, etc. And it's a massive, massive deal. Code of ethics, etc. It's all in there. So please go and check that out. So, you know, if you're somebody out there that does struggle with technical analysis a little bit, and you'd like to go and have a look and be exposed to our work over a 12-month period, all you need to do is just go and click on membership in the top left-hand corner there. Very, very affordable. I think it works out at approximately, on a month-to-month basis, I think it's about $40 or something, paid annually, but you get a lot of benefits with the membership, and I would suggest that it's possibly a good idea if you're looking to learn technical analysis, or you want to add technical analysis insight to your decision making process. So thanks very, very much for watching, and maybe we can welcome you soon. Thanks.